Again, good morning and welcome everyone. Thank you for joining us today as we kick off the Resilience series of webinars this morning. My name, for those of you who I may not have met yet, is Christina Groff, and I'm the President and CEO of the Cheektowaga Chamber of Commerce. As many of you know, we work closely with businesses here in Cheektowaga and across the region. And while the buzzword a year ago was pivot, today's buzzwords are cautious optimism. And it's seen in survey data. We feel it when speaking with local business owners. Though the labor shortage and increasing workforce challenges are muddying that optimism, a positive long-term outlook still remains. We are so thankful today to welcome Michael McMahon as our keynote speaker. As a reminder, we're going to utilize the Q&A function. So as you're jumping on the call, note the function at the bottom of your screen that says Q&A. You can pop your question in there and we'll be able to moderate and facilitate as we go throughout the presentation and at the end. And there's also a chat box. So feel free to have conversations and keep this very interactive as we go. So drop that information or any questions or thoughts you may have in the chat box for us to see. Also, as a quick reminder before we jump in, this presentation, along with all of the others in the series this week, is being recorded. So members of the Chamber can find and access them in the Video Resource Archive in your Member Information Center. So Michael leads KeyBank's commercial banking hub here in Buffalo and was recently appointed president of the Buffalo market. Congratulations on your appointment. With Mike's tenure in the banking industry and direct connection with the Buffalo business community, the insight shared today is tremendously valuable. So Mike, with that, we'll turn it over to you, and thanks so much for being here.
Great, thanks Christina, and thanks for those of you who are attending, and thanks to the Chamber of Commerce for allowing KeyBank to have a conversation today. I see here, the conversation is the future economic outlook. So what I wanted to start off with really first and briefly, just a little bio on me. As Christina mentioned, market president for KeyBank here. That's a new title for me. Today would be day 7. So new to that title, but I have been the commercial banking sales leader for 3 years now, and I've been a KeyBank employee for 6. And I've been in the banking world for about 20 years. So what my lens that I look through is and have the history, and is the commercial banking lens. And as we get into the survey a little bit later in the discussion, a lot of it will be from the lens that I've looked through in my banking career as a commercial banker. So I thank you again, and I look forward to chatting. And just what I will try to do is from time to time pause in certain parts in the discussion so we can have a chance to answer those questions in the chat box. So it's the questions and the data is fresh on people's minds, and we don't get to the end of the presentation and look back to 20 minutes ago. A little bit about KeyBank from a national perspective. Just for those of you who don't know, we're the 11th largest commercial bank in the country. We've got 17,000 employees across 15 states in our commercial and retail footprint. That footprint spans pretty much across the I-90 corridor in the US. We have operations in Alaska and down into Oregon, and all across the 90 right into to Massachusetts and Maine. So as a gentleman who hired me said, if Canada were to ever invade the US, KeyBank would be the first line of defense based upon our geographic footprint. We also do have investment banking, institutional and corporate banking offices throughout the rest of the entire country. And that would be a workforce that works in debt capital markets, equity capital markets, investment banking, real estate capital, and so on and so forth. So we do touch both coasts of the country and have a presence throughout most of the country from a commercial banking and corporate banking perspective. KeyBank in Buffalo. So KeyBank in Buffalo. Here in Buffalo, we are considered KeyBank's Northeastern Regional Headquarters. This is and Christina, you can actually go to the next slide, please. So the designation of regional headquarters came to Buffalo for Key back in 2016 when we acquired First Niagara. While that was a tough loss for the community to have such a great bank in First Niagara be acquired by Key, Key has done a wonderful job transitioning and really focusing on the workforce and the community. And we'll get into a few of those statistics in a moment and what that means. But we still maintain a very sizable workforce here. As I mentioned, it's second sizable largest workforce in the country. And our banking business, book of business, is also one of the top in the country as well. And that compares to markets in Colorado and Utah and New York City and so on and so forth. So we really still do maintain a very strong presence here. And aside from our banking presence, also what drives our sizable workforce is this is home to our mortgage origination center and our contact center. And those workforces are sizable and located at various offices in the city and throughout the north towns. Our corporate regional headquarters that I'm sitting in today, where you can see the sky, is Larkinville, and just below me and behind me is the east side of Buffalo, so just what's north of Larkinville. As we look to some of our statistics on our banking here in Buffalo, we have approximately $8.6 billion worth of deposits, and that number comes right off of a report that the FDIC reports on. That number has KeyBank as about 15% of all deposit base in Western New York, which is an aggregation of consumer deposits, commercial deposits, corporate deposits, so on and so forth. And at 15%, that has us as the number 2 largest bank in the region based upon deposit share. Not going to mention who's number 1. We're not allowed to say that name in my office. As we talk about our ability to focus on workforce and maintain growth in this region, that $8.6 billion number grew by about $1 billion over the last year. Some of that was acquisition growth, so growth of new customers, acquiring new households, acquiring new commercial clients. And some of that was the buildup of cash, the PPP loans that people held on their balance sheets, maintaining liquidity throughout the pandemic. But it also did show that we're continuing to grow in this region, and there's evidence based upon those numbers. You know, the second biggest data point that shows our investment to this community is our branch network. Our branch network is 65 branches with 120 ATM machines. That number at 65, I believe, and Matt, you can correct me if I'm wrong, Matt Pitts, my PR counterpart, has us at the number 1 largest branch presence in Western New York.
Mm-hmm. That's correct. Yeah.
Now, this is my third statistic, and arguably right now in the eyes of KeyBank, the most important statistic is our National Community Benefits Plan and what that means to us. This stat here shows what KeyBank has invested in the community. But before I talk to that really quickly, I'm going to talk about what our National Community Benefits Plan is from 30,000 feet. Back in 2017, post-merger of First Niagara, the bank went out and created a $16.5 billion plan that was going to be used to invest across the bank's footprint. And some of the facets where we would be investing in is support of small businesses, support in lending and home lending to low to moderate income communities, affordable housing projects, community development projects, and transformational philanthropy. So that's a $16.5 billion plan where the bank was going to spend down that money and invest that money over the course of a time period. And in Buffalo, since that time, KeyBank has invested $729 million in the Western New York community. Again, that's through small business lending, home lending in low to moderate income communities, affordable housing, community development, and transformational projects, which is really a powerful sign of us, the bank still continuing to invest in the community, invest in its workforce, and maintain a presence here that was once driven by First Niagara and Key and is now Key. So, $16.5 billion, we've spent $729 in just Buffalo alone. You'd probably think, well, gee, that's fantastic, but sounds like that would probably, if you're looking nationally, be something that dries up. Well, yes, of course, that would dry up over time. However, a couple of weeks ago, we just announced we are extending and expanding that program to $40 billion, up from $16.5 to $40 billion that'll be invested not only in Buffalo, but across the country. It's a demonstration of KeyBank's desire, willingness, eagerness to spend money and continue to invest in our communities and what makes us thrive. So a little bit about what's going on here in Buffalo with KeyBank and what's important to us, our people, our communities, and our customers. So I'm going to pause there before I jump into kind of a, looking forward and economic discussion and see if there are any questions in the chat room. Okay. All righty. So before we dive into the middle market survey, and I think Christina has probably sent everybody KeyBank's middle market survey, and I'll discuss what that is, and we'll get into that survey momentarily. But right now, I wanted to kind of talk about what we're seeing. So I alluded to early on that I'm the commercial bank sales leader, and that's the lens I look through. So the data points that I'm speaking towards are really based around discussions with our clients here in Buffalo and our commercial banking and business banking book of business. It's discussions with our clients. It's discussions with our business counterparts, accountants, lawyers. It's It's the view from looking at income statements and balance sheets of our customers over certain periods and seeing trends. It's looking at cash deposits. It's looking at the movement of money and where customers are investing. So where I'm getting most of my outlook is an aggregation of all these discussions and these data points that allows us to talk to what we think is going on in the local economy, and then what we're seeing with our counterparts across the country through the survey and through other discussions. So Christina said cautious optimism is the new buzzword, and she couldn't have hit the nail more square on the head with cautious optimism. I think cautious optimism is really almost the new norm. Certainly Q4 of last year, a little bit of Q3, definitely Q1 of this year. And I think where cautious optimism is at the forefront is the next 3 months, the next 3 quarters, Q2, 3, and 4 of 2021, and what happens in this economy. I think what's really driving our cautious optimism is, first and foremost, evidence of what's going on in the M&A market. So mergers and acquisitions. As we'll get into some of the data on that in a moment in our survey, but where I look at M&A activity and how I look at that as being a positive driver in the economy is businesses are willing to sell because they think their valuations are at a high, meaning business is good, and people who are looking to buy those businesses are seeing a company that's is either very strong and worth buying, and they can get it at a good value, or maybe they can see a business that they can make some changes to because the economy is good and they can drive good value that might not already be there. So going into Q1 of last year, the M&A pipeline was very strong. It was at a 4 or 5 year trend of good volumes of M&A activity. There's a combination of strong multiples and valuations in companies, and the baby boomer generation in places like Western New York not having a succession plan within the family or employees where they wanted that liquidity event and wanted to get out. Fast forward a little bit to March. Pandemic hits us. M&A activity just all but shuts off completely. Almost all acquisition activity is put on pause. And fast forward a little bit furthermore, you get into Q3. Financial performance trends started to go back in the right direction. There was that cautious optimism in the air. Valuations based upon financial trends started to get back to close to pre-pandemic levels, and people's optimism got them back to saying, ready to put that acquisition back into process, and let's get going. So in Q4, we started to see acquisition activity pick up. In Q1, we started to see transitions being executed and the pipeline of new activity growing. So long-winded way of saying M&A activity to me shows there's a lot of good optimism in the market and good optimism in the economy. I'm not going to dive into this too much as I'm not an economist, but we are seeing some early signs of inflationary pressures, which do signal some growth opportunities over time. So those are the good. The bad, I think one overarching theme here that all of us on this call, no matter what your business is, can relate to is labor shortage issues. And that goes from the top, from our large manufacturing clients, all the way down to small retail businesses, even ones that are outside of the scope of what my team covers. And I can correlate this personally to chatting with a large landscaping company that does my spring cleanup. The founder hasn't touched a lawnmower in 15 years and is out mowing lawns right now because they can't find labor. I was driving down Niagara Falls Boulevard the other day and just looking at lines of drive-ins at all these fast food restaurants were so incredibly long. And I think what I would correlate that to, aside from it being dinner time and rush hour, is the fact that there's a labor shortage in places, in the small businesses, in retail franchises and restaurant franchises, where things are just moving a lot slower. So labor shortages are a huge topic of concern. It's a big issue in small businesses, and it's a big issue in large businesses. I think the government did a wonderful job at pumping stimulus into the economy and into small businesses, and also into the hands of individuals. And unemployment, skyrocketed during the pandemic. And I think the lag of the pandemic, part of that lag is people coming back to work, people enjoying the benefits of unemployment, and people still having significant concerns about safety and health. So that's an issue that's going to be a theme we're going to be talking about well into the end of this year, and definitely one that is a hot topic. we'll get into some of those other themes as we get into the survey, but I think labor is one we can all relate to for sure. Some of the other things that across the country that we're not quite seeing yet is both feet in, dipped into the water of reinvesting in property, reinvesting in equipment and technology and people. However, here in Buffalo, we're seeing that. In our book of business, we're starting to people spend money on equipment. We're starting to see people refinance corporate mortgages to go out and put additions on and to enhance buildings. We're starting to see people purchase new properties and put new plants out there, and definitely investing in people, investing in talent has become extremely important because of a labor shortage. And one of the largest singles of that is we're starting to people see companies spend money, something we haven't seen in 12 months. We're starting to see people borrow money a little bit more aggressively than they have in the last 12 months. And those are all signs of, people having confidence enough to go out there and start spending that money, take the risk to do it. Moving a little bit away from commercial and a few points on the consumer sentiment is extremely strong. Some of the economic data that's published out there shows consumer confidence is at a high for the last 3 to 4 quarters. Certainly going into Q1 of last year, consumer confidence was at record highs. We're still not quite there yet, but the trends from Q2 all the way to today are showing really strong growth in consumer confidence. KeyBank is benefiting from that in ways that we have record highs in Q1 in our mortgage operations business, record highs in our debt and credit sales products, and record high in new home sales, new household sales, which really to us, a new household sale is bringing in a new checking and banking customer on the retail side. So these are all really good signs. People are spending money, people are making financial wellness decisions, and they're not, people aren't on pause anymore. So with that in mind, I'm going to pause there. It looks like there was another question that popped into the chat room, and let's see if I can figure out how to see that here. Okay, it was a nice positive comment. All right. So thank you for that, Melanie. Appreciate that. Okay. The middle market survey, so why we're all here today. A little bit about what the survey is. The middle market survey is a survey that KeyBank does on a quarterly basis. What we will typically do is we will go out and we will survey 400 business owners or executives in middle market businesses. And those companies are in various industries and across the footprint across the country. So the value of that is that we get data from across all various geographies, all different industries, and all different size businesses. The respondents of those businesses are defined as basically as companies that have revenues from 10 million all the way up to 2 billion. So your local, neighborhood pharmacy or small manufacturing shop, all the way up to your publicly traded large corporate company like a National Fuel Gas or a Moog Corporation right here in Buffalo. So again, that shows the diversity in the data and where it's coming from, and it allows us to correlate across all sizes and industries, again, and geographies. Interesting timing to have this quarter's survey to be discussed because of what we went through last year. When business as usual, I'd say over the last 4 years, every quarter was just, you did a little bit of this, you had a little blip here, a little blip there. Well, last year we had a pandemic, a recession, and an election. I think that's a triple whammy that caused for a lot of really interesting discussion, a lot of interesting data, a lot of struggle across the country, and a lot of change. So with that being said, I'll dive into the survey here. If you could switch to the next slide, please, Christina, that'd be great. This slide here, just kind of from the survey respondents that were in New York State. We asked questions, the three questions that we'll kind of discuss here are outlook for the next 12 months and the company, state economy, U.S. economy. So what you can see here is when asking business executives or owners how they feel about the next 12 months, as you can see on the left slide there, the left picture there, we show excellent, very good, good, and fair of approximately 85%. So fair is better than average. Fair is better than nothing or good, and then you got good, very good, or excellent. So 1% of respondents, so approximately 4 people thought that 4 companies thought that the economy was going to be poor. Now, there certainly are businesses that are still impacted by the pandemic, businesses that might be driven by mass gatherings, or such as gyms or concerts or any public gatherings. So I think and with the vaccine becoming more prevalent, I think that's where you're seeing a lot of that type of data shrink, and the optimism becoming more towards the fair, good, very good, and excellent. So as you can see here, 31% excellent, 36 very good, 19 good, 85% people have either some optimism or very strong optimism how their company is going to perform this year. Those are fantastic statistics. I don't have the slide in front of me as to what that data looked like last year, but I think in Q4 it went up. I think, Matt, unless I'm way off, correct me please, but I think we're up by about 15% across the board in the good, very good, and excellent. So again, it's just showing that swing into optimism and consumer confidence and business confidence growing, which I think we would all expect to see that based upon the election behind us now, the vaccine, the access to the vaccine tremendous, and people just getting back out to somewhat of a new normal. Maybe not life was pre-pandemic, but certainly trying to get back out and about and enjoy life a little bit more. So those things do have a correlation to some optimism. Moving into the middle bubble or picture there, state economy. I think we show here again, 90-ish% of respondents say that there's fair, good, very good, or excellent in the state economy. And if you want to get rid of that fair, because fair isn't that strong of an optimistic word, we're still showing here 70% of respondents are good, very good, or excellent. So, the state economy is strong. And then if you go over to the national economy here, we've got slightly less optimism there. It's showing approximately 75% as opposed to 80, or as opposed to 70% are in that fair or poor, and the remaining 75% in the good, very good, or excellent. And I think what's probably driving that is just some other pandemic certainly is a big issue in some other states, a lot larger than New York State now today, and other various state issues. And, from an economic perspective across the U.S., you've got supply chain issues, continued labor issues. A good point here that PPP loans have been exhausted. So that's people are looking from a national level and seeing that there still are some challenges out there. But from a company and state perspective, there is still a lot more optimism. And then even at the U.S. level, to see 70 to 75% good, very good, or excellent, that's 6 months ago, or even 8 to 10 months ago, there was so much uncertainty around the election, the vaccine, the recession. And I just think that the positive and cautious optimism that we've seen in the past 6 months is continued to help this data get a lot better and give people some confidence that life after the pandemic is going to be okay. That's not without some concerns still. So a lot of the respondents still have some pretty significant concerns. So if we can slip to the next slide, Christina, we can talk a little bit about what those concerns are. Just got to get my picture is covering this slide, which I don't need to see a picture of me. So, okay, here we go. Obviously, the number one factor that is coming out of these respondents is the COVID and coronavirus impact. It is driving issues with labor across the board. It is driving issues with salespeople getting back into other people's offices and companies allowing people to come into their offices, not knowing what safety protocols are being followed at home or in the workforce. So it is still driving challenge. It is still a bottleneck to getting back to business as usual. However, when that question was asked back in fourth quarter, it was 90%. So we almost, we've seen a 7% decrease in the concern there, and the trending of all of these, maybe not all of these, most of these is going in a direction that you would like to see, which is showing optimism. That was not the case over the course of Q2, Q3, Q4, where those numbers were more swinging negatively. So number two, tax rates. Obviously, I think there's a lot of concern around what tax rates are going to look like, and we're in it with a new, post-election with a new president, and we just don't know. There's still uncertainty around tax rates. Now, that has shifted and that's been more of a volatile statistic. Mid-pandemic, pre-election, that number was in the mid to high 50s, and it got down. Post-election went down, and then we got back into this year, and that concern is starting to rise again a little bit as the pandemic slowly starts to, I wouldn't say take a back seat, but allow room for other concerns to jump up into the front seat with the pandemic. The recession is still a huge question. You read out there in a lot of surveys nationally, locally, that people are still very concerned with an election still having, excuse me, I just got sidetracked by a question here or a comment. Let me just read that before we get too far away. Okay, yes. So there's a direct message that I think, and again, it's people are back to labor. I don't mean to sidetrack and be all over the place here a little bit again, but as the COVID-19 impact is still, it has significant impact on businesses, but also individuals' desire or fear of getting back into the offices, and that right there is directly correlates with the labor shortages that we're seeing. So. Again, now with potential economic recession, again, as I was getting to before, there's still a lot of uncertainty. No one has that crystal ball. There's a lot of economists and investment analysts out there that still think that we're at high risk of a recession at the end of this year. I can't predict that. What I can tell you is what we're seeing today in our customers and what's going on out there. So there is still uncertainty of a recession, and half the respondents do consider that a strong risk still. Volatile political landscape, that's something that as we get further and further away from the election, that will continue to go down, hopefully, as it has in the last 3 or 4 quarters. Labor cost, that's an increasing concern. And I honestly think that's going to be an increasing concern, hopefully not in perpetuity, but certainly going into the next 2, 3, 4 years as the return to work is something that's going to lag the economy, people's comfort. Isn't as stimulus isn't as prevalent for individuals that they're going to have to get back to earning and hope and with a rising minimum wage, I think that's another problem that'll pushing people away from heavy labor manufacturing jobs into the jobs at fast food chains, something we've seen over the past few years where people just aren't willing to put themselves at risk working in higher labor, higher risk manufacturing jobs as they are working at the local food chain or restaurant and making the same wages. Healthcare costs, it's always going to be a concern. It's a cost that's increasing. It's certainly not as prevalent as the previously mentioned costs, but I would say as we get below healthcare, I think a lot of these other costs are just ones that have just kind of teetered at the levels that are at and will always continue. Tariffs was a huge concern 2 years ago. And a decreasing concern. I could certainly see people having some concern around tariffs with a new president in place, but I don't think we've seen any signs yet of really what that impact could look like. So these are really, while we do have a lot of optimism in the system right now, albeit cautious optimism, there are still some points of place for people to pause and say, well, I've still really got some significant concerns, and here they are. Any questions there? Okay. Let's jump to the next slide and we can get back into some M&A discussion here and what we're seeing from M&A and expansion. So cautious optimism, things are looking okay. The economy, I think everyone thinks the next 12 months is going to be good. We kind of step back here on the last slide and we walk through, while people think things are good, there's always concerns. So we saw what those are. So again, now we're going to touch back base upon expansion and then acquisition. This slide really shows more to acquisition, but expansion is a sign of positivity. And what we're seeing now is that 65% of our customers are saying that they're going to expand in 2021. And again, what expand means is they're going to go out and add on to their property or their plant. They're going to buy a new plant or property or build one. They're going to buy new equipment. So it just shows that there's a plan for expansion, which in most cases usually directly correlates with a plan for growth. And we are seeing in 2021 budgets and beyond that people are cautiously planning for an increase to revenues and a growth. to their business. What's driving that? Well, cautious optimism is driving it, but I think the spread and the speed of the vaccinations is a huge, huge driver of that. I think people are anticipating that labor shortage will become less of an issue, however, will remain an issue, but less of an issue. And I think something that we cherish here in Buffalo is the spring and summer weather, although looking behind me, it's sunny but cold and windy here in mid-May. People tend to be, out and about doing more, spending more. And I think there's some optimism of spring in the air in our market. And I think when you put those two things together, there's a really a hope of returning to full productivity with business owners. So, if you look at the micro level and you look at, individuals, consumer sentiment, consumer confidence being up, you look at the vaccinations getting out there, and I'll be the first to admit what the warm weather does for a positive attitude. I think all those things will hopefully help drive the Western New York economy into a nice direction going into the back half of 2021. Acquisition activity. So now when we get a little bit more granular with our customers and start talking about acquisition activity, not just seeing it, what the bubbles here on the two left is, it's these two little pictures on the left here. They're really talking about, the question was asked, will you consider an acquisition? Did you consider an acquisition in the past 6 months? So in Q4, when we look at yes, completed one, no, but strongly considered one, we had 49, almost 50% of respondents said that yes, they did one or strongly considered one. And if you look at Q1 survey, that number goes from 50% up to 55%. So a 5% increase right there is a sign that M&A activity was starting to pick up. And then even if you add in that, that the yes, where you're seeing the drop is that 7% drop in quarter over quarter, and the no, I did not consider it. So that's a sign that people's concerns about the pandemic and focusing on, financial performance to get to an acquisition are starting to change. And there's a little bit more of a forward look as opposed to a really just focusing on what just happened, a little bit more of a what's about to happen. So that's a good one. And then if you look over to the right-hand side there, likelihood of completing an acquisition in the next 6 months. So not just talking about one, but completing one. So quarter over quarter, Q4 to Q1, we're up 5% in extremely likely. We're up 4% in very likely, and we're slightly down in somewhat likely because all those somewhats moved into the highly likely. So when you look at the very unlikely and extremely unlikely of 38%, that's down 4% to 34%. So look, not 100% of those businesses are going to sell. So you've got to also factor in where we're seeing some nice growth in those numbers of likely to sell. What's also in a lot of those extremely unlikely and very unlikely isn't people that are concerned about the economy, but it's people that are young business owners. It's people that have a family. They have family involved in the business, and there's a succession plan in place, and a sale isn't in the works. Now, I think Christina just asked a question here, so I want to address that since we're right on it. Would be interesting to see the impact on commercial real estate numbers in correlation with the expansion growth figures. So that's a really great point, Christina. Unfortunately, commercial real estate does not tie into what we're doing here. The commercial real estate that ties into this survey, into this business, is owner-occupied properties. So it's plants, it's offices that people are operating in, not investment properties that would correlate to landlords and commercial real estate developers. So I don't know if I answered the question or thought there, Christina, but good. Okay. Sounds like I might have touched on it appropriately. So this is, again, one of my favorite data points, M&A, and right here, what we're seeing locally, again, to put this into real, what we're seeing activity is we're seeing a ramp up of activity of acquisitions closing. We've done a handful of acquisitions in Q1. We financed a few in Q1 this year. We're in the process of financing a few more right now, and our pipeline for potential opportunities to finance acquisitions is growing on a weekly basis out into the future. So it's very exciting for the marketplace, and it's also very exciting for us because it's good new business for us as well. Questions around M&A activity? Okay. My thoughts here. now, there are, so one of the last things that this survey really touches on here, the last couple points here, kind of what other what acquisitions are negative, what's out there today that's negatively impacting acquisitions. So I talk about the overarching macro perspective of the direction of acquisitions happening, but you still have a lot of naysayers out there that are uncertain or definitely not ready yet. And I think there's a few factors around there that we can touch on. The next slide, if you could please, Christina. So again, the pandemic and taxes and all the labor shortages, there are a lot of things that we talked about that are driving actual business. Now, what's driving, the uncertainty or the unlikelihood or potentially drive people to be hesitant to acquire or to sell? The number one is economic and demand uncertainty. So what's going on with the economy? What's going on with the potential recession? If I go buy a company in the back half of the year, is that company's performance going to decrease? And then I've just overpaid for somebody whose valuation might not return back to normal. So that is a huge driver. And I think, some of the other drivers, and you can see here, the percentage of businesses' concerns are a lot lower: energy costs, government regulation, interest rates, and for places that we operate in, even less impactful: stock market volatility, corporate tax policy, inflation, the ability to secure financing. That's a big one. Access to capital. I think later in the week you have a discussion with someone around access to capital. There's a tremendous amount of capital in the system through all sorts of lending institutions. Interest rates. Anybody who Googles the words interest rates will see that there's not a lot of indication that they will jump up in the near future too much. So low interest rates have really been a good driver of people borrowing and people buying. So as you can see here, there are some factors that are impacting the ability and desire to go out and acquire and be acquisitive, but they're not driving those decisions. They're factors that I think are really secondary factors and really not as impactful to the ability to land an acquisition and execute on one. So I'll pause there really quick before we kind of wrap up the survey here. Any questions on that? Okay. So, look, I think as we wrap up the survey here, we're back to business. We're 1 year post-COVID, really happening. Restaurants are opening up. People are out, shopping. The infamous stretch on the 290 at 4 o'clock is back to being a traffic jam, which to me is a good sign that things are back to normal. I 6 months ago drive down the 90 at 4 o'clock and didn't have to change speeds. The other day I got stuck in a traffic jam at 4 o'clock, and it wasn't the bottlenecking from a fender bender on the other side of the thruway. So those are all some really good signs. In early 2020, the overall health of businesses of our customers in these surveys has gone from June to September to today. The positivity continues to increase in our survey results. Businesses have made tremendous adjustments to the makeup of their company. They've really tightened the belt. They've made themselves leaner and meaner. And while there is the concern around increases to taxes, increased cost of labor, companies have gone and seen where they can trim the fat to be able to adjust to those changes and keep their businesses running positively. So when the revenues kick back in and the supply chain bottleneck loosens up a little bit and we can get back to normal business pre-pandemic, everybody will be ready for it. And I don't think that any of these concerns of increasing costs will be as impactful as you might sit there and think they would be. With that, being said, I think, the overarching concern of business owners is the vaccine getting out there and people getting fully vaccinated. I can share that same sentiment, how important it is to get vaccinated and what it means for the viability of our local economy and our national economy and what it means for the confidence of businesses and business owners. It's really trending in a positive way. And when asked the question, 85% of our business owners said it's an extremely positive effect is having people vaccinated. So I'll wrap it up here with comments around the survey and around KeyBank or our outlook from our commercial banking clients and in our own personal opinions here at the bank. But I'll open it up to some Q&A if there's anything you want to know that I could answer around KeyBank or any other thoughts on the economy locally or nationally that I may be able to answer. I'll caution you that I'm not a national, I'm not too granular on the national statistics, but with that being said, I'll stop here and open it up to some Q&A. So Christina, I'll pass it back to you.
Sure. Thank you again. So just a reminder, please feel free to utilize either the chat box to input any questions that you may have for Michael. There's also a Q&A feature at the bottom of your screen. And I'll just say, I think the information that was presented today is tremendously valuable, and I'm looking forward to seeing, the Q2, the Q3, 4 figures as we progress also. It's the data like this that really helps to drive our organization and the conversations that we're having around the board table and with our Legislative Affairs Council. Certainly we see a diverse makeup of businesses and industries operating in Cheektowaga, and I think that's what makes our organization so unique. So I really appreciate the presentation and being able to have an ongoing conversation about these the numbers and what you're seeing.
Absolutely, my pleasure.
Just looking here. I don't see any future or any additional questions that are coming through. But I know, and we touched on it a little bit before, I was definitely curious as to your thoughts or, in conversations that your team might be having with businesses on, like I said, the PPP, with the funds being exhausted, when we get to the period after those funds have been expended in the second draw, what, if you think that we'll continue to see that, that continued growth. I think, that definitely provides a cushion and a sense of comfort to a lot of our local businesses, knowing that there's that to utilize. Yeah.
So that's a really good point. And we didn't discuss PPP in this survey just because it's been discussed and it's been the hot topic now.
Right.
I can't speak to small business, the correlation of PPP and what it means for small businesses. I know the impact has been a lot greater on small businesses. So, from, 500,000 or 10 million in annual revenue, a much more tremendous impact. And I don't have that survey data in front of me. And I know that the PPP has been used a lot quicker. Now, in our world, what we're seeing is a lot of people have been able to, have needed the PPP, but have also been able to save some of that cash to get through, to maintain that liquidity on their balance sheet, to get through the pandemic, and now to turn around and be able to utilize that to get back to, I guess, I'd liken it to digging out of the hole that they're already in. So what I mean by that is, growth has been nice, really strong fourth quarter for a lot of our businesses, certainly not to where they expected to be for the full year, obviously as an impact by the pandemic, but the PPP loan played a large role in not only for middle market businesses, not only confidence, but their ability to put some liquidity on their balance sheet to help them go out and grow and invest in technology and people for the future. I think for the smaller businesses, and this is really just based upon conversations with my peers in the smaller business world, those monies were used a lot quicker and a lot more there was a lot much more of an immediate necessity to be using those. And I think as those monies, I can't anticipate there will be another round of PPP because I think we've gotten far enough from the pandemic and with the vaccine getting out there. I don't want to speculate though. I'd like to think that the second round, because we're still in the funding process. The application process is coming to a close. I think that the dollars are actually are being exhausted. It'll be a lot easier to answer that question in 3 months when we really see the trends, because I think by then those monies will have probably been used where they've been needed to be used. So on the larger businesses, I think it's a little bit more of we'll use those to invest in the future. And I think with the smaller businesses, we're going to use those to stay afloat. And round two is definitely a second lifeline for a lot of businesses in the smaller business community. So it'll be interesting to see in the fall what happens. I mean, I think 6 to 9 months ago, a lot of sitting at home, working from home with CNBC on in the corner, there was a lot of concern that, a large percentage of small businesses wouldn't be here this time this year or that time this year, so June. And I think the PPP funds have certainly helped to stave off some of that foreclosures and bankruptcies, but there's certainly, we still haven't felt the hangover of the pandemic yet. And the PPP monies have kind of slowed down the effect of what happened. And so I think we're, a lot of the survey respondents and even, people I've spoken to, there's a lot of optimism that it's not going to be as bad as we thought it was. Certainly from where the bank sits and how we look and how we manage our book of business and how we think about credit and risk management. We feel like we're a lot better off today than we thought we would be 8 months ago. So.
And that's great, and I think that cautious optimism trend, it's nice to see that continue. And there is a sense of positivity. And I think that's such a huge takeaway. So I don't see any other questions coming in. So we can certainly, wrap up unless you had any additional comments or things you'd like to leave the group with. Like we said, this will also be shared with all of our chamber members and businesses there. So if there's any last, pieces of advice, especially for the middle market businesses that are operating in our area that you'd like to leave with, welcome to have that. And again, we appreciate your time.
Just get vaccinated. No, I think, stay positive, be fiscally responsible, and, we're going to get through this. We've gotten through it already. The worst, I think, hopefully is behind us. I think we've got a lot of way to get out of this hole still, but things are going in the right direction. So I would just say, looking forward to the remainder of the year. And I'm a banker, so I don't have a lot of advice for people. I'm here to help. I'm a service provider. So look, if anyone has any questions that hit their, as soon as we hang up, those questions hit your mind, Christina knows how to get a hold of me, and I'd be happy to try to answer them to the best of my abilities.
That's wonderful. Thank you. And just kind of following up and wrapping up, there was one additional comment there in the chat box. I think the hangover effect is the labor shortage and inflation on the horizon. I agree. We're definitely feeling the pains of the labor shortage and the impact on our local businesses, regardless of industry or size, certainly in the hospitality industry, retail industry for sure. So yeah, it'll be interesting to see, what's to come. And like I said, a lot of this data and a lot of the conversations with our business owners, that's what drives the work of our organization and what we can do in the community. So again, I appreciate everyone participating on the call. We hope you'll join us for the remainder of the series this week. And if you are interested in learning what else we have on tap and on the lineup for next week, you can go right to the Chamber of Commerce website. That's cheektowaga.org and view all of the information there. Thank you so much, Michael and Matt, for helping to coordinate this and kick this off. And a quick shout out, I know she was in the comment box as well, but Melanie McGovern of the Better Business Bureau also helped to coordinate. So I want to give a quick shout out and thank you for her work in helping make this a reality. All right.
Yeah, thanks again, and appreciate it. Everybody have a wonderful spring and summer in Buffalo, and we'll look forward to connecting down the road.
Absolutely. Take care, everyone. Thank you.
Take care. Bye-bye now.